Wow, look at that, look at that, look at that. It's been a while since I've been out here on the Intercoastal broadcasting live to you about what the markets are doing. Good morning, my name is Kenny Polcari and I am your host of the party. And today is Thursday, January 26th. 2023, and it looks like it's going to be a nice day here in South Florida. A little bit cloudy and overcast at the moment, but there is no forecast for rain, and that's a positive. So what is it that we need to know? What is happening in the markets? Well, the Bears tried to crush them yesterday morning, but the Bulls would not have anything of it. It was all about earnings, and more earnings. This morning, we're going to get GDP, consumer consumption, retail inventories, and new home sales are all on the economic calendar. Oil is up this morning as inventories are down. And what are we going to have for dinner? We're going to have the pork roast stuffed with provolone and Tuscan herbs. It is delish. Okay, so let's just talk about what happened yesterday. So the Bulls are not dead yet, right? They were just waiting in the wings, ready to pounce on those Bears that were using the Microsoft earnings report as an excuse to sell the market yesterday morning. Recall that on Tuesday night, Microsoft reported what some thought were mixed but better results. And in the moments after the report, in the post-trading session, traders took the stock up, right? But overnight, Tuesday night into Wednesday morning, they had a change of heart, right? They decided that, well, maybe the report was not all that they thought it was. And so they sold it, right? And that cast a pall over the mood of the markets yesterday morning. We saw futures were lower, all talking about Microsoft and what that meant for the other names in the industry, what that meant for the market, right? Because Microsoft was now going to be the culprit. And since it was the first of the tech titans to report, they decided to use it as a guide for what was to come, right? Suddenly, investors and traders, maybe they weren't so confident, extrapolating the Microsoft results across the board, making projections on all aspects of what the tech industry was about to report, right? So think about Apple, Google, Tesla, IBM, and Amazon. The stock, which had surged higher by 4% on Tuesday post the session, was now quoted down 2% or $5 in the pre-market yesterday morning. And that caused me to say, and I put this in my note yesterday, if they get really carried away, I suppose we could see Microsoft trade down to the 220-ish area, which was the November low, over the next couple of days. But I don't think so. I don't think that is going to happen. I said I'm a buyer of Microsoft on weakness. Well, they succeeded in taking it down to $230 by $9.55 in the morning, which was a $12 decline or 5% of its value. And then boom, the Bulls jumped out of the bushes and they ambushed the Bears, slaughtering them along the way, right? Taking Microsoft into positive territory by $2.17 in the afternoon. It took it to as high as $243.30, a 13-point swing from low to high, before backing off a bit, readying to fight another day, ending the day yesterday at $240.61. This morning, it's quoted up $1.50 at 241.40, 241.50. In fact, I was on with Liz Klayman yesterday on Fox Business at 3 p.m., and we discussed this very fact. You can find that interview on my Twitter. You can find it on the Fox Business website. Just search for Liz Klayman and then look for me. The headline says Microsoft is a screaming buy. And so it goes. So while stocks ended the day mixed, it was essentially a win, right? Considering the beating that they took right out of the gate. By 4 p.m., the Dow ended the day with a 9-point gain. The S&P lost less than 1 point. The Nasdaq ended the day down by 21 points, or 0.2%, after being down more than 260 points, or 2.5%. The Russell gained 5 points, and the Dow Transports lost 160 points. And it was another busy day of earnings, right? There wasn't really any macro data to speak of. Mortgage apps, which did show a 7% gain week over week, but that was not the driver. It was the 40 earnings reports that we got that really drove the action in the investor psyche. And with 12 of those 40 reporting losses, it leaves the trend at just below 70% run rate for the companies reporting a beat, right? So we're historically below the average, about 75%. We're running just below 70%, right? We heard from Telephone, they beat. US Bank, they missed. ADP, they beat. General Dynamics, they beat. NASDAQ missed. Hess beat. Abbott beat. Kimberly-Clark beat. Boeing missed. NextEra Energy beat. NSC missed. Tesla beat. IBM beat. Wolf beat. And the list goes on. And what this really showed was mixed results for the U.S. economy, as these companies represent a range of industries, right? Leaving the tug of war between the bulls and the bears alive and well. And then the bell rang. In the post-market, we awaited reports from Tesla, IBM, and Wolf, and a handful of others. But let's not kid ourselves. The focus was squarely on Tesla and Big Blue. Now, Big Blue is IBM, for those of you too young to understand the reference. What we were about to hear, and how would the algos react to those earnings reports? Well, Tesla reported record quarterly profits and revealed that the recent price cuts have fueled a surge in demand for new Tesla cars. The algos went nuts in the moments post the report, taking the stock up $10 or 7% to end the session at $154.75, leaving Tesla up 52% year to date. Hello? This morning, it's quoted at $154.50, $155. And then we got Big Blue. They beat as well, reporting $3.60 a share versus the $3.58 that they expected, right? Revenues of $16.69 billion was better than the estimates of $16.15 billion, but ever so slightly below the $16.7 billion last year. I mean, are you kidding me? They reported that flat sales year over year as a strong dollar hurt the bottom line. But look, that's ridiculous. The strong dollar is hurting every multinational company's bottom line. So get off that soapbox. That's what a strong dollar does to companies' earnings that need to convert foreign currencies into dollars. It's not a surprise at all to seasoned investors. And by the way, it works the other way. A weaker dollar will boost that, right? IBM is also joining the tech industry and announcing a 1.4% RIF, which is a reduction in force. Think layoffs. And that amounts to about 280,000 jobs. The algos initially set the stock up $5 to 145, and then they had a change of heart, taking it down to 137, leaving it down 2% in the post-trading session. This morning, the stock is quoted at 138, 139, and like Microsoft, I am a buyer of IBM on any weakness. I own it. I love IBM. I think the story's great, and it's just one of the old stalwarts, right? Today, this morning, U.S. futures are up. Dow futures up 12, the S&Ps are up 9, the Nasdaq's ahead by 62, the Russell's up 2. Eco data today includes Chicago Fed survey, the Kansas City Fed survey, personal consumption, and the first whack at fourth quarter GDP. It's expected to show the economy expanded at 2.6%, down from the third quarter rate of 3.2%. We're also going to get wholesale and retail inventories, durable goods, capital goods ordered, and capital goods shipped. That's a key metric as well, right? Watch for new home sales. We're expected to be down 4.7%. But with mortgage apps up last week and the week before that, maybe the housing data is going to begin to show some slight improvement, right? Not really positive, but maybe not so negative. Remember, I told you yesterday that home builders are offering all kinds of extras and sweeteners to get buyers off of the sidelines. And with mortgage rates expected to go higher in the coming months, as the spring selling season kicks off and the Fed continues to raise rates, it's going to be interesting to see if these home builders are successful in kind of drawing people off the sideline with all the freebies and the extras and the landscaping, the pools or the finished basins, whatever they're going to give you, right? We're going to get 30 more earnings reports today, and they include Southwest Airlines, JetBlue, Roku, Northrop Grumman, MasterCard, Sherwin-Williams, Dow Chemical, Intel, and Visa. Again, a range of reports representing the airlines, aerospace and defense, credit cards, streaming services, chemicals, and semiconductors. So it's going to be a broad swath of the U.S. economy. European markets are all higher this morning, up by more than 0.75% across the board. Retailers are taking the lead across Europe. Improving sentiment across the Eurozone is also raising the idea that maybe the Eurozone can avoid a recession. Something I'm not sure I agree with just yet, but we can run with that at least for today, right? Look, just FYI, European markets are outpacing U.S. markets so far this year, with Italy and the Euro stock indexes up more than 10% year to date. Germany, Spain, France, and the UK are not that far behind, up closer to 9%. So they are acting very well, and the U.S. indexes are just running just south of that. Oil this morning is up, right? Go figure. Who would have thought that? The Energy Information Agency Administration reported that crude inventories only rose by 533,000 barrels, well below the expected forecast of 1 million barrels, right? The rise in oil is also being helped by the weaker dollar. This morning, oil is trading just north of $80 a barrel, leaving us in the 80-85 range for now, 85 being a resistance trend line, so that will be key as we approach it. And gold continues to move up, something I've been big on, right? This morning it's trading at $1,952 an ounce, and it's now up by more than 17% off the November lows and up more than 7% this year. And that's taking the miners with it. Newmont Mining up 16% year to date. Barrick Gold up 14%. FCX up 22% year to date. A sector I have liked and I've been discussing on this platform since the year began. And I continue to like the precious metals. Treasury prices are churning in line as investors opt for stability and optionality during a continued volatile time, right? The curve remains inverted, suggesting that the recession is coming. I'm just still waiting for the NBER to call it, right? The National Board of Economic Research to call it, because they're the ones that have to call an official recession. The S&P closed the day yesterday at 4,016, essentially unchanged, right? Yesterday we pierced 4,000 and then we pierced 3980 to the downside. The trade as low as 3940, right? Just a hair above the short-term trend line at 3949. Futures this morning suggest more churn as we await the Fed meeting next Wednesday and the ECB meeting on Thursday. The ECB is important because it speaks to what Christine Lagarde sees for the Eurozone, the same way we expect JJ what he sees for the US. She, like JJ, has pledged to keep raising rates and then holding them at higher levels for longer. Right? So let's see if that narrative has changed for either banker. I don't think it does, but I'm not a member of either central bank board, so take it for what it is, right? I just don't think that narrative is going to change yet. They've been very, very consistent in their messages. Remember, you're a long-term investor. Build it and stick to the plan. Trying to pick tops and bottoms is not what you need to do. Leave that up to the day traders. It's about building that strong foundation. Dollar cost averaging into it and reinvesting all the dividends, unless of course you need the dividends as income. If not, then you put them back to work for you. Don't be afraid to buy your names on weakness, as long as the weakness is not a fundamental shift in the sector or the name, right? Because that's how you're going to dollar cost average down. And in the long term, that's how it's going to work for you, right? A perfect example of the semis. Last year, they crushed them. For what? Are we suddenly not using semis in everything we touch every single day? Right? The SOX, the SOXX, which is the semi ETF, lost 40% in 2022 and has gained more than 15% year to date and going higher. Nvidia, one of the classic names, lost 54% in 2022 and has gained 32% so far this year. And if you had been dollar cost averaging last year on the way down, you would have had a nice position and a nice cost basis. So when they come after them again, like they're doing, you enjoy the ride. So in the end, stick to the plan. You can call me to discuss this anytime. I'm always happy to have that conversation. Okay, so what are we having for dinner tonight? We're gonna have the grilled pork roast stuffed with provolone and Tuscan herbs. This is a simple dish. It is delicious. It's a simple dish to make. While it sounds a little bit more complicated, it isn't at all, right? It's easy to prepare and it's absolutely delicious, and you can cook it on the grill or in the oven. This one's on the grill. And you need to begin by making a jar of fresh Tuscan herbs. You dry them and then you use them on so many things. Additionally, it's also a great gift to give to somebody, whether it's Christmas or somebody's birthday or just to give a gift, right? You're gonna buy a nice little ball jar, the glass ball jar. You're gonna fill it with the dried herbs. You're going to tie a ribbon around the top and attach a handwritten note to it that says something like, enjoy the simplicity of these fine herbs. Life is better with a great homemade dinner. Okay, so let's get going. The Tuscan herb mix consists of sage, rosemary, garlic, and sea salt. You can add other herbs as you wish, right? Maybe some bay leaf or fresh basil that you've been growing in your own garden, or maybe you just bought it at the store. There's no magic to this. The creation is completely up to you. But this is a good guide. You're going to use 6 parts sage, 2 parts of rosemary, 12 cloves of garlic, about 1 tablespoon of sea salt, and some pepper. Do not kill it with too much pepper, because your guests can always add more pepper, right? So what you want to do is you want to take the herbs off their stems, and pile them onto a cutting board, right? And then with the slice, you're going to take the garlic, you're going to slice that up, and you're going to add the salt. Now you're going to begin chopping and mixing the herbs. And the best knife to use is one of those mezzaluna, right? It's that half moon knife that has the knobs on both ends, right? It's rounded, and you just go like this, and you chop up you rock it back and forth, and you chop up the herbs, and it chops it up really nicely, right? It's a must-have in any kitchen, right? Now you want to chop the herbs until they're nice and fine, and you want to transfer them to a cookie sheet and allow them to dry for a day or two. Then you're going to put them in a jar, in that glass, in that ball jar, and seal it, and then tie the ribbon around it and put a little note on it. Okay, next, here we go with the pork roast. You want to go to the butcher, have them slice it open. Tell them that you're going to stuff it and then roll it, right? Open it up and massage a bit of olive oil and salt and pepper all over the pork roast on both sides, inside and out. Now you can line the pork roast with the provolone cheese and then take some of the herbs. Don't overdo it, but take some of the herbs to make sure you have enough. Carefully roll it nice and tight and then tie it with kitchen string all around, right? Season it on the outside with salt and pepper and then set it aside, get it ready to cook. Now you're going to heat up your grill and you're going to get it really nice and hot, right? Then use your brush to clean off the grill. Place a pork on the grill. And turn the heat down to medium, right? Cover close the grill and allow it to cook. Turning it on the grill so that you grill all sides of the pork roast, right? While it's grilling, you can prepare some applesauce, or if you prefer, some fig spread, right? In a saucepan, you're going to add some of the figs, you're going to add chopped rosemary, you're going to add half a cup of orange juice, a tablespoon of honey, a quarter cup of water, and salt and pepper. Bring it to a boil and simmer it for about 20 minutes, right? The mix should be nice and thick. Don't make it watery. It should kind of thicken up. Once it cools, it'll get a little bit thicker, right? You want to then, as it's cooling, you want to strain it, reserving the liquid. Then place the what's left in the food processor and blend it until it's nice and smooth. Add back some of the liquid to keep it smooth and spreadable. Then cover it and just put it in the fridge, and you can have it to use whenever you want. When the pork is cooked, remove it from the grill, cover it with foil, and let it rest before slicing. You want to let it rest for about 10 minutes. Then slice it and serve it with the fig spread or with the applesauce. Allow your guests to choose one or the other. It's nice to give them a choice. Serve the pork with roasted Brussels sprouts or maybe sauteed broccolini, a large salad, and your favorite red wine. Remember, it's all about the presentation. It looks like the storm clouds are building. It looks a little bit gray to me, so I wonder what that says about the market today. In any event, until tomorrow, take good care.